Hello friends, welcome to EduTap's YouTube channel. Friends, in this video we are going to talk about India's external sector, right? So these videos are going to be helpful so far as the descriptive component of the examination is concerned. The phase 2 of the examination is just around the corner. So we have discussed a good number of chapters ka important parts with you through these videos. We have provided you complete details. By now I can tell you that the entire course has been updated. The entire phase 2 course has been updated by EduTap, right? And everything is available as a part of the study material that we have provided to you. So this is an important lesson, India's external sector. If you look at the kind of questions that have been asked in the past, you will see that a good number of questions have appeared, right? So this is an important chapter. So let us take things ahead and talk about this India's external sector. Do join EduTap's YouTube channel, right? Through our YouTube channel, we are bringing a lot of free content for your preparation, and the lectures that we are providing through our YouTube channel, notes related to them are being provided through our Telegram channel. So you should subscribe to both YouTube as well as Telegram channel of EduTap. We have been able to produce a consistent stream of results across various examinations, RBI Gr B, NABARD Gr A as well as SEBI Gr A examination. We hope to see your name, we hope to see your fame in this EduTap's Hall of Fame. So we hope that you're working very hard, and we surely are working very hard towards your success. We have launched a good number of courses, RBI, NABARD, SEBI as well as EPFO examinations as well as various other courses. So these courses are available in standalone as well as consolidated format, right? Combo format. Depending upon what you're preparing for, you should enroll into these courses. Now let us start discussing about openness and growth in the Indian economy. So this is a very important chapter. If you look at the RBI syllabus, right, they have very clearly mentioned openness of the Indian economy, right? So we need to talk about this aspect, that how has the openness of the Indian economy has had an impact upon, let us say, the growth in the Indian economy, or let us say what has happened within the services sector. So what I'm going to do right now is that I'm going to juxtapose these two things. I'm going to talk about openness of the Indian economy, and I'm going to try and discuss with you that what is the impact of this openness upon various aspects of the Indian economy. So first and foremost, right, we need to understand that is there a link? That is the first question that we need to answer. As economists will, they debate that what is the link between openness and growth of of any economy, right? So the important thing to understand over here is that this debate is not settled. It is still a hotly debated issue, in the sense that we do not know for sure that what impact openness have upon growth, right? Is it positive? Is it negative? How much positive, how much negative? That debate is still ongoing, right? So if you look at the experience of newly industrializing countries such as Hong Kong, South Korea, Singapore, Taiwan, of course we just refer to these countries as NIC. Now they are, for all practical purposes, they are industrialized countries. So if you look at their experience of experiencing a rapid economic growth, one set of economists believe that this growth was because of openness, because of export that these economies undertook, right? And that to export of labor intensive manufactured products. So one set of economists are saying that because the economy was open, what is the meaning of open economy? Trade is happening, right? Goods and services are flowing across the border, investment is flowing across the border, capital is flowing across the border, people are flowing across the border, right? Moving across the border. So one set of economists believe that this rapid growth that newly industrialized countries experience, that was because of openness, right? And then there is another set of economists who believe that this spectacular export growth or export success that was witnessed, that was because of import substitution and careful policy planning. So you can very clearly see that this debate has basically two coins. One set of economists are saying that this growth that these countries experienced, that was because of their openness, that was because these countries exported. And then there is another set of economists who are saying that no, this growth that was experienced in these NIC countries, that was because of the import substitution and planning exercise that was undertaken before the economy was opened. So what is the link between growth and openness? That is being debated, right? Now if you look at, basically we want to find the correlation. We want to be able to say for sure that openness leads to growth. We want to be able to say that, but that kind of research, or the research, doesn't indicate that very clearly, right? There are a very good number of variables that have to be accounted for. See, growth does not happen only because of opening up the economy, only because allowing import and export or allowing the capital to move freely will not for sure generate growth. There are many variables. For example, you should have a skilled workforce. You should have good infrastructure. You should have good policies, attractive policies in place. You should have a good market in place, right? So there are many variables, right, which determine what will be the level of growth, right? And when we are undertaking research, we are not able to conclusively say that yes, openness of the economy results in growth of the economy, right? It has been experienced, it has been seen that because of greater openness, what happens is that the share of industry rises. You know that sectoral composition of an economy is composed of contribution by agriculture, contribution by industry, and contribution by services. Okay, now if you open up the economy, it has been shown, empirically shown, it has been shown via research that the share of industry does go up, right? So trade helps in the process of industrialization. That is very clear. But it has also been shown that it is very important to have good institutions, good laws, good courts, good governments in place, right, to have a positive trade income nexus, right? What we are trying to, again, what I'm trying to, this is a very, it's a difficult, relatively difficult topic to understand for many students, but I'm trying to explain this to you, that the question that is being asked over here is that is there a link between opening up the economy and, like, for example, recently we opened up the we allowed a greater amount of FDI in insurance sector. That is example of opening up the economy. We allowed FDI in defense production. That is example of opening up the Indian economy. We have allowed foreign portfolio investment into the Indian economy. We have allowed FDI into the Indian economy. We have allowed import of so many items at very low levels of import duty into the Indian economy. We can export so much from India to the rest of the world. That is, these are all examples of opening up the Indian economy. The question that we are trying to deal is that does this openness lead towards growth? And that is the kind of question that we are trying to discuss over here. And the conclusion is that this is still a discussed issue. This is still a debated issue, with one set of people believing that yes, there is a link, and another set of people believing that there is not so much of a very strong link. That is the end result that is coming out over here. Now, if let us say that yes, openness does result into economic growth, so how does that happen? Like, what are the factors that cause growth, right? How does openness help in bringing about economic growth? So there are four channels, there are four possible avenues as to how openness can result into growth. The first one is that demand will increase because of openness. How will demand increase? We will be able to export to US, we will be able to export to European Union. So because of increased demand, there will be greater amount of production, right? And because of greater production, there will be, let us say, an increase in GDP, and that will be growth, right? So that is one way that how openness can help bring about growth. Another way that openness can help bring about growth is that if the economy is open, we will be able to import cheaper and better quality inputs, right? We will be able to import good quality machines, right? So since we are able to import a lot of cheap and good quality raw materials and machines and so on and so forth, therefore our production process will become more efficient. Therefore the goods that we have produced, they will become more qualitative, and therefore we will be able to export them in a competitive manner, and we will be able to increase our share in the export market. That is one way in which how our manufacturing will become more efficient, will become more competitive, and therefore we will be able to produce more, and therefore we will be able to get higher growth. There will be rising demand, right? Why? Because of access to export market. There will be falling cost. Why? Because of access to cheaper raw material, good quality raw material. This will help in boosting profits of the industry, and therefore if the industry is profitable, if the venture is profitable, therefore people will be investing more in businesses. People will set up more number of businesses. If I have one factory, I'll create two factories. If I have two factories, I'll create four factories. That essentially means that there will be capital formation, and because of investment there will be growth. So the first channel, if this is very clear to you, please type yes in the comment section. The first channel through which openness can bring about growth is by giving a demand pull and by pulling the costs down. So by raising the demand, openness can help in growth. By ensuring cost reduction, openness can help in growth. Keep this in mind. If this is clear, if the first channel is clear, please type yes in the comment section. The other important channel is competition effect. What happens is that when you open an economy up, when the Indian economy was opened up, so you were not forced to buy Onida ka TV only. You had the choice to buy from Sony, you had the choice to buy from Samsung, you had the choice to buy from LG. You have so many choices. So just imagine a time when you want to buy a TV, go buy Onida ka TV, right? Towards now, where is Onida? Where is it, right? Where is it in the market? Have you heard the name of Onida much in the market? Probably not, right? So what happens is that because of competition, domestic firms are forced to improve their efficiency. Those who are inefficient will be forced to close down their shops. Those who are otherwise efficient will be able to improve their efficiency. Overall, the average efficiency in the economy will improve. The kind of products that we are making, the kind of production processes that we are using, the kind of locations that we are using, the kind of techniques that we are using, we will optimize all these things. We will rationalize our decisions, and therefore essentially because of competition, our industry will become better. And since our industry will become better, therefore it will be able to produce more for the world, and therefore there will be growth, right? That is the competition effect. If this competition effect is clear, please type yes in the comment section. The third important effect is learning effect. We will be able to learn from the rest of the world. We will be able to acquire better technology, better skills. We will be able to, understand how your multinational corporations are undertaking marketing all across the world. So we will be able to learn through competition. We will be able to learn through experience of multinational corporations that enter the Indian economy. Therefore efficiency will improve, therefore total factor productivity will improve, and therefore growth will be brought about. Another impact, another way of how openness can bring about growth is through capital inflow. What is the meaning of capital inflow? Foreign direct investment can flow into the Indian economy. If FDI can flow into the Indian economy, we will be able to ensure that we are having access to good technology, we are having access to good managerial skills, and therefore the overall level of technology or the skills being employed by firms will improve, and therefore we will be able to do well. Foreign portfolio investment, when that comes into the market or when that flows into the economy, right, it helps increase the depth and liquidity of the stock market. Therefore it becomes possible for Indian industries to raise capital. Therefore it becomes possible to finance various projects. Therefore it becomes possible to carry on the investment activity going ahead, right? So there are many channels, there are many avenues of how openness can sort of bring about growth. So these are the four major channels, right? Theoretically speaking, that how openness can bring about growth. So this thing, if this is very clear to you, please type yes. Moving ahead to the next part, right? We have to discuss about what happened in the 1980s in the Indian economy, because in 1980s, you must have read through our notes, I'm sure. In 1980s, we were able to witness a good spurt in economic growth. Now that good spurt in economic growth that was witnessed in 1980s, that 1980s was the decade in which we were able to break ourselves free from the shackles of Hindu rate of growth. So in 1980s, demand increased quite good, the growth increased in a good manner, growth increased to a good level, but that increase in growth was almost always domestically driven in 1980s. In 1980s, India undertook small amount of liberalization of the industries, right? That means that the rules pertaining to establishment of industries, they were a little relaxed, as a result of which domestic industrialization got a boost. Similarly, import was liberalized to a certain extent, as a result of which it became possible to import inputs and components. There was also an attitudinal change of the government towards the private sector. No longer did the government looked at private sector with suspicion too much. No longer did the government not want to trust the private sector, because the government realized that at the end of the day, even the private sector is a contributor to the economy, and therefore the energy of the private sector has to be harnessed. So there was a significant attitudinal change that happened in 1980s, and because of all these things, there was a strong boost that was given to business confidence, profitability, and therefore investment activity got a strong boost, as a result of which we were able to witness a growth spurt. Now this growth spurt that we witnessed in 1980s, this has got nothing to do with openness. Why? Because if you look at the level of international trade, okay, so international trade was still a small part of the economy. The international trade was stagnant in the sense that the trade was at 14% of GDP at the start of 1980s, and it was around 14% of GDP at the close of 1980s. So fundamentally speaking, international trade did not increase much. If you look at the bulk, if you look at the trade in goods, right, you will be able to see that almost 80% of India's trade was of trade in goods, and in that we were having a deficit. Small amount of services trade was happening, that trade was balanced. The degree of integration of the Indian economy was weak. How do you determine the degree of integration of any economy with the world economy? You see what is the level of trade as a percentage of GDP, right? So you can see very clearly that given the fact that international trade is comprising only 14% of India's GDP, you can very easily conclude that the degree of integration is rather weak, it's not strong, and whatever growth boost or whatever increase in growth rate that we witnessed in the 1980s, that was primarily because of increase in domestic investments, and the contribution of, let us say, openness, or the contribution of foreign trade was very minuscule or very less. You may be wondering that why am I giving you this background of 1980s? I'm giving you this background of 1980s because in 1990s, India will open up the economy, and therefore you will be able to see a good amount of change that has taken place in the Indian economy from 1990s downward. So to be able to appreciate that change, you need to be able to understand what was the condition prior to that, so that you can actually understand that what is the significance of the change that I'm going to now talk about, right? So the first thing that we dealt with is that, is there a link? And I told you that this link is debatable. No matter how debatable it is also very clear that because of openness, certain advantages flows into the economy. Like we discussed earlier, that these are the advantages: demand gets increased, costs gets reduced, competition gets increased, so that helps, learning gets increased, that helps, capital inflows happen, so that helps. Thereafter, I have discussed with you that what was the background, what was really happening in the Indian economy in 1980s. Now once you have this background in mind, I want you to appreciate what happened in the services sector as India opened its economy up, and you will see the unfurling or the rollout of an absolutely spectacular outcome. In 1990s, slowly and steadily, the speed and depth of integration will go on increasing. Again, integration of the Indian economy with the rest of the world. India will emerge as a net export of services, and this net export of services will keep growing, in the sense that the surplus that we will be enjoying in the services sector will be huge. Why? Because India will be exporting a lot more services than what it would be importing, as a result of which, because our exports in services is so high as compared to imports, services will emerge as a net earner of foreign exchange. Services sector will bring in a lot of foreign exchange for the country. How did this happen? Why did this happen? You have to realize that technology changed globally somewhere around 1990s, and because of the advent of computers and information technology, we were able to undertake modularization or fragmentation of tasks. So earlier, all tasks used to be performed in-house in huge companies, let us say in Western countries. Because of modularization, because of tasks being defragmented, it became possible to sort of, hire business process services from, let us say, countries like India. So if call centers had to be opened up, those call centers need not be opened in New York, they could be opened up in New Delhi. They need not be opened up in Manhattan, they could be opened up in Mumbai, right? So what happened because of this modularization or because of fragmentation is that there was a reversal of the process of vertical integration. Earlier, one company used to have all departments within itself, within its, let us say, central location. Now it became possible to bundle out tasks to, let us say, developing countries. Country like India, which had a huge stock of scientific and technical manpower, manpower was available at low wage rate, we became leaders in export of business services. Look at the kind of growth rate of services sector. 6.2% in 1980-95, 21% in 96-2004, and 27% during 2005-2011. What changed between these years? You see that in 1980-95, India was not so integrated with the world. Indian economy was not so open. Gradually going ahead, Indian economy opened up, and you can see a fantastic rise in the growth rate of the services sector. If you look at the share in world's export of the services sector, it reached a very respectable 4% in 2011, much higher than share in world exports of, let us say, manufactured goods from India. If you look at the contribution of services sector to India's GDP, that rose to a respectable 57% of GDP. Right? And you will see, you will appreciate this, that this spectacular rise that we have seen, that is because of the growth that was experienced in the organized component of the services sector. Even within the services sector, there is an informal or the unorganized component, and there is a formal or the organized component. And it is this organized component. You have to imagine Infosys, you have to imagine TCS and these kind of companies. This kind of organized component responded positively to growing global demand. And how is it that we were able to cater to this growing global demand? Because of IT, because of computer, because of our manpower, because of integration, because of all of these things, we were able to fulfill this demand. Now again, there are two sets of thought in this. One set of thought, I have explained to you that India opened up the economy and therefore the services sector was able to run ahead. That is the first argument, or that is the first one side of the argument. Then there is another side of the argument. The other side of the argument says that where did this good stock of scientific and technical manpower come from? Where did it come from? Right? It came from all those government colleges that were established at various points of time. Because you have to realize that in 50s, 60s, 70s, 80s, 90s, you did not have these private engineering institutions or anything on those lines much. Right? So this entire stock of manpower that we keep talking about, keep harping about, that India had huge stock of scientific technical manpower, India had huge stock of technical scientific manpower. Where did this scientific technical manpower come from? It was Rajiv Gandhi's government in 1985 who said that computer and information technology are technologies of the future, and therefore we have to develop domestic capabilities for the same. And therefore government research and development institutions did a lot of work in India, and that helped to a great extent in the, in the boom of this sector. So should the government's contribution towards the growth of the services sector be completely overlooked, and we should say that it is only because of the openness of the Indian economy we were able to see a smart growth in the services sector? No. So it is basically always a combination of these two factors. And that is again going back to the point that we were trying to discuss over here in the first instance, that is there a link between openness and growth? I would say that there is a link between openness and growth. Yet that yes, because of opening up the economy, we are able to access foreign markets. Because of opening up the economy, we are able to access cheaper inputs, blah, 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 blah. But at the same time, having a proactive or having a positive environment, having an enabling environment to support industrially, to support businesses locally is also very important. And this belief of mine that it is important to have good local conditions will be sort of proven true so far as my understanding is concerned when I see what happened in the agriculture and when I see what happened in the manufacturing space. Look at what happened in the agriculture space, right? GDP share of agriculture declined consistently in this era of openness, right? Greater openness की वजह से it is not as if that we were able to export a lot of material. Why? Because developed countries simply did not open up their markets to agricultural exports. There was pressure on fiscal consolidation. IMF had given loan to us, right, to help us out from the balance of payment crisis, but that loan came along with various conditionalities, and one of the conditionality was that the government of the day was expected to reduce its fiscal deficit. How do you bring about a reduction in fiscal deficit? Either you increase your receipts or you decrease your expenditure. In India's case, fiscal consolidation meant cutting back on public investment. Why? Because subsidies were being given, we could not reduce the subsidies. Therefore, what can be reduced? Public investment can be reduced. Along with reduction in public investment, infrastructural facilities to support the agriculture sector were already very poor, and eventually over a period of time these infrastructural facilities were never put into place. Your cold chains, your rural roads, electrification program for rural India, all these things never came along, or it took a lot of time to bring these things along, as a result of which agriculture, horticulture and all these various activities could never really get modernized. And even if, let us say, that developed countries had their markets open and they were willing to buy from India, they were willing to buy farm produce from India, still our ability to be able to reach those markets would have been very low, simply because the basic infrastructural facilities were never into place. Services sector was never stymied by the absence of basic infrastructural facilities. Where did the organized services sector take root? Organized services sector took root in urban metropolitan centers, where electricity was there, where roads were there, where schools, colleges were there, where law and order was there, where everything was there. In these centers, your services sector, your organized services sector took root. Where does agriculture take place? In rural areas. What kind of infrastructural services are we having in rural areas? Absolutely pathetic services we were having in, let us say, the last decade of the 20th century or early parts of the 21st century. In fact, we are even struggling now to be able to provide all basic facilities in rural areas. What happened so far as the manufacturing sector is concerned? Because of the increased competition from China, because of larger import penetration, because of inefficiency that was always there, because of deficiency in basic infrastructural facilities which we are still trying to overcome, because of deceleration in public investment, there was stagnation in the manufacturing sector. So manufacturing sector could not really benefit from this openness. Even the external capital that came into India in the form of FDI or FII, that did not really help us. In which sectors did India attract the maximum amount of FDI, you may say? In tertiary activities, in services sector, right? Why? Because India had the conditions for which were in favor of the growth of the services sector, and India never really had conditions which could really favor the growth of the agriculture sector or the manufacturing sector. There was an absence of broad industrial base in the rural areas, and we have to compare with what was happening in China. When China was opening up back in 1980s, they focused a lot on their town and village enterprises, TVEs. They focused a lot on these town and village enterprises, and they made sure that the base of these enterprises is good, strong. These enterprises are competitive, efficient, and they are actually able to benefit from opening up of the economy. Whereas in case of India, even when we opened up, the agriculture sector or the manufacturing sector could not take as much advantage of that opening up as the services sector could take place. So you have to be able to appreciate that opening up the Indian economy meant different things for different sectors. And I have tried to explain to you very briefly, giving you an overview of what happened so far as the services sector and what happens for agriculture and manufacturing. Now, somebody may point out to me that India became the pharmacy of the world. Somebody may point out to me that yes, India is exporting a lot of medicines. India is exporting a lot of vaccines. Somebody may point out to me that India is a manufacturing hub for a lot of automotive parts, and we are exporting a lot of those automotive parts. I would completely and wholeheartedly agree with you that yes, so far as pharmaceutical is concerned, yes, so far as automotive industry is concerned, India is probably doing very well for itself. I would not deny that. But where are we so far as textiles is concerned? Where are we so far as electronics is concerned? Where are we so far as electrical goods are concerned? Where are we so far as other items which are manufactured by industries are concerned? Why are we importing so much from China? Why are we still importing so much from all our trade partners, right? Things which can very easily be manufactured in India, right? So when you look at the complete picture which we have presented to you via our notes, you will be able to appreciate that openness did not really help the manufacturing sector out overall as much as it should have. And that is a very important lesson that we have to learn, that if you want to make Make in India successful, we need to do something about it. We need to make sure that the conditions are conducive to sort of support the growth of manufacturing in the economy. Whatever I have said regarding services, agriculture and industry is again proven by these statistics that I am placing in front of you. regarding what happened so far as output work per worker and factor productivity is concerned in the various domains. You look at what happened in services sector. The factor productivity, which is basically an indication of how efficient our processes are, right? That increased, that sort of tripled, almost close to triple. If you look at the output grew dramatically from 5.9% to 9.1%. The output per worker, that also increased dramatically, and factor productivity, that also increased quite a bit. However, you would see that factor productivity of industry and factor productivity of agriculture, that does not compare anywhere with what the factor productivity in services is, and we are therefore not surprised that yes, services sector has been able to do a lot better for itself in this era of openness. So all these things have to be looked at in a complete scenario to be able to understand things. Moving ahead, if we talk about capital inflows, and in this particular discussion I am going to talk only about what happened because of the inflow of foreign portfolio investment into India, right? We have given a complete section appreciating foreign direct investment as a part of our notes, but right now I'm going to talk only about foreign portfolio investment. If you analyze the capital inflows into the country thanks to all the openness, right? So you will very clearly be able to see that maximum amount of foreign capital that is coming into the country is coming in the form of foreign portfolio investment. And I have written two words over here. They are highly volatile and they are fair weather friends. What is the meaning of this? See, as the Indian economy opened up and as the foreign institutional investors and portfolio investors, they were allowed to invest in Indian stocks in the Indian equity market. So there was a huge considerable growth in India's stock market. And I don't need to give those figures to you. You can, just Google it up, that what was the value of Bombay Stock Exchange in, let us say, 91, and what is the value of Bombay Stock Exchange in, let us say, 2021. You can do that yourself and you will be able to appreciate that there has been a considerable growth in the stock market, right? But what is the effect of this growth? What is the quality of this growth, right? A lot of money that has come in to buying the shares of blue chip company from the secondary market. So these FIIs have invested money, yes, no doubt about that, but in buying shares of very good companies in India from the secondary market. That is point number one. There is hardly any direct contact between the real sector and the FPI money that is coming in. This FPI money, it comes in for a very short term time period, right? It comes so that they can gain, in the sense they can have some capital gains. Like for example, let us say if they have purchased shares and the value of those shares increase, that is capital gains. And they're highly volatile. Why are they highly volatile? Because these funds fly out of India at the first instance of risk, at the first instance of there being destability. What happened in March 2020? Right, in March 2020, the same Nifty, which is probably today at maybe 13,500 levels or 14,000 levels, that same Nifty was at the level of approximately 7,500, right? And how did that happen? That because of the COVID-19 pandemic, when we imposed lockdown, when the entire world imposed lockdown, there was a lot of panic, and immediately these funds withdrew themselves from the country, as a result of which the Nifty collapsed, the Bombay Stock Exchange collapsed, and shares were, they lost a lot of their value. That indicates volatility. Moment the signs sort of started to emerge that okay, there is, stability coming back and the growth will come back. What is the level of Bombay Stock Exchange today, or what is the level of Nifty today? It is again back to 14,000 plus. So what happened is that these foreign portfolio investments are capable of pulling the Indian stock market down from a very high level to a very low level in a very short period of time, and they are again capable of bringing the index back up from a very low level to a very high level. Now for some of us this may be a profit making opportunity, and some of us may be thinking that why am I crying about it? I am crying about it because when funds flow into and out of India at such a high speed and such a high volume, it puts a lot of pressure upon the Indian currency. It puts a lot of pressure upon the exchange rate of India's currency, and RBI has to manage that exchange rate fluctuation, which is very, very difficult to manage, right? And towards that extent, RBI incurs a huge cost in the form of holding a very large amount of foreign reserves, foreign exchange reserves, because tomorrow if there is an outflow of foreign portfolio investors from India, we should have the foreign exchange reserve to be able to stabilize our exchange rate. And for that, RBI holds on to a huge stock of foreign exchange reserve, and this stock of foreign exchange reserve is not much, it's not fetching us much amount of returns, because RBI doesn't know when it will need its foreign reserves. Therefore, what does the RBI do with its foreign reserve? It invests this foreign reserve in low yielding US treasury bills, right, which can be sold easily. So fundamentally, this huge stock of foreign reserves that we are holding as a matter of precaution. And secondly, when we are having a huge inflow of foreign portfolio investment, that results in increase in foreign reserves, that causes an increase in the quantum of high powered money in the Indian economy, which has the possibility to stoke inflation, and therefore RBI has to undertake sterilization, and sterilization is not easy to undertake. So what I'm trying to say is that having these foreign portfolio investments coming into and out of India, thanks to all the openness that we are having, right, it is a double-edged sword, right, in the sense that yes, there may be some advantages, but there are a lot of concerns, there are a lot of disadvantages that this volatile flow of FPI causes. Yes, foreign direct investment, if it comes, is excellent, right, and we have spoken about that a great detail going ahead. But these kind of questions have always appeared in your examination, that what has been the impact, right, what has been the impact of flow of FPI and FDI into India, and I have discussed the matter of foreign portfolio investment with you. What has been the impact of openness upon regional growth within India? So if you do an analysis of the growth in various states, so those states which were more open, it is seen that they were able to grow a little faster than the states which were closed. States that were able to change their production structure and were able to benefit from export opportunities, right, they showed a greater amount of growth, right. And there is again a very clear correlation between quality of institutions, investment climate, and growth. So those states where the quality of institutions is good, which are investor friendly, which have a good investment climate, they were able to attract a lot of investment, and therefore they were able to benefit from the process of growth and also from the process of opening up of the Indian economy. What happened because of the global crisis? What was the impact of the global crisis upon India? And I'm talking about the 2008 global financial crisis, which is also referred to as the Great Recession. Obviously, India as well as various other emerging economies, we were hit very hard. Okay, we were hit very hard because of this recession, because of this crisis. But the recovery was also very rapid and quite spectacular, right? If you look at, the various channels through which India was impacted, the first channel that I would like to highlight is capital outflow, and I am talking about our friends foreign portfolio investment. There was a net outflow of foreign portfolio investment in a very short amount of time, as a result of which India's currency depreciated to a great extent. There was a huge impact on the stock market. Like I explained to you what happened in March 2020, something similar happened in 2008, right? That when foreign portfolio investment exited from the Indian market, the primary market as well as the secondary market got severely disrupted. Banking sector was not affected to a great extent initially, because there was not much threat of contagion, because Indian banks did not have access or did not have the exposure to these subprime mortgage assets, which caused the housing bubble to burst in the US market. So we did not have access to those kind of securities. Therefore, we were quite shielded. And in the aftermath of the turmoil, we were able to bring things situation back on track relatively quickly, was because we provided a lot of liquidity support, we provided a lot of fiscal stimulus, and there is some inherent strength, resilience in the Indian economy, that given the fact that we are a developing country, and given the fact that a lot of expenditure, consumption expenditure has to happen in the Indian economy thanks to our large population, so there is some amount of resiliency and there is some amount of inherent strength in the Indian economy that demand does shoot back up quite fast. Like for example, even during the pandemic we observed that yes, demand shrunk down, as a result of which India entered into a technical recession, but that was only for a short period of time. Surely India bounces back thanks to that some amount of resiliency that we are talking about. Now I have tried And I know that I have not done complete justice to the chapter, and that is something that cannot be done in 40 minutes ka lecture. It requires a lot of discussion, right? But I have tried to present to you certain ideas that how openness of the Indian economy had an impact upon the Indian economy. And why are we discussing this? See, generally speaking, up till now, when we used to deliver lectures for the RBI Grade B examination, we used to focus a lot upon the objective part of the syllabus. Like for example, in the objective part of the syllabus, as a part of the course, I have surely talked about various types of exchange rates, like fixed exchange rate, flexible exchange rate. I have talked about current account balance and capital account, and I have talked about balance of payment. I've talked about all of these things in great detail. And while I was having those discussions, I did not much focus, we never much focused upon, on the descriptive angle or the analytical angle, that what really happened in the Indian economy thanks to all the openness, right? We never discussed that. Now, since the examination has introduced or included a descriptive component within the scheme of the examination, therefore it becomes important to have this kind of discussion. And therefore what we have done is that we have, by now I can say to you confidently because it is done, we have uploaded the entire fodder material related to all these aspects as a part of our course. And going ahead in the next year, we have this massive advantage that a lot of work has already been done by our team, and going ahead we are only going to improve upon our position going ahead. And a lot of discussion that is taking place now via these videos, a lot more of this kind of discussion will be added into the course material. That is something that we are working upon, right? So I hope that you have some idea that how openness impacted the Indian economy, and there is a lot more that needs to be discussed. There is a lot more that has been provided that needs to be read, right? So this is something that we would like to present in front of you for this lecture, right? uh, अभिनव अनुराग और आस्किंग सर इतना डेटा कैसे याद रखे रहेगा एग्जाम के वक्त? इतना डेटा याद रहने का सिस्टम ऐसा है ना कि इफ़ यू रिवाइज एवरीथिंग एटलीस्ट 3 to 4 times, you will be able to remember the most important trends and the most important analysis, and the most important keywords will become a part of your vocabulary. So the moment important trend, important analysis and important vocabulary becomes a part of your system, you will be able to reproduce it. It will not happen in the first instance. For example, to be very honest, so even when I teach on a regular basis, so I have to revise everything to keep it fresh, to keep the arguments fresh. And if I don't stop revising, I'll be fossilized, and that will happen with anybody, right? So what you have to do as a student is that you have to revise a lot, right? Dvipal Prajapati, Goku, as well as Abhinav Anurag, as well as all those who are watching these lectures, if there is any doubt that you would like to ask, or if there is any comment or any observation that you would like to share, please be kind enough to share. We have discussed what is the link between growth and openness. We have seen how openness can impact growth. We have seen the scenario in 80s. We have seen the impact of openness upon services, the impact of openness on agriculture and industry, the impact of openness on competition and productivity. We have talked a little about capital inflows, particularly foreign portfolio investment. We have talked about regional growth and openness, and we have also spoken a little about India and the global crisis. A lot of stuffs have been discussed. Amit Yadav, RBI Grade B के marks कब आएगा? मेरा नहीं हुआ, but next time I will appear with full enthusiasm. Amit Yadav, this is a kind of question that our support team is able to answer best, that when are the marks expected and all these things. So you can always mail to us on this email ID, hello@edutap.co.in, and we will surely be able to come back to you with a response. If there is any doubt pertaining to this lecture, or if there is anything that you would like to share, from the angle of ESI descriptive, please do that with me, and I'll be able to help you out in that as well, right? So I'll bring this session to a close over here. I hope that you all are studying very hard, studying really sincerely, and will be appearing in the examination with a lot of gusto, with a lot of enthusiasm. With this, we'll bring this session to an end. Thank you very much. All the very best, and Jai Hind.